Hi, welcome to the Market Alert for Monday, 9th of December 2019. So, the end of last week, wild roller coaster weekends where it started after blockbuster jobs, return of deal optimism. So, the trade deals there, and also what I spoke about in Friday's Market Alert about rigging the unemployment figures. And surprise, surprise, here we go. We had 266,000 new jobs created, 181 predicted. Previous was 156, so over 100,000 jobs added on Friday. And of course, you saw the results. The market shoots up over 100 points just on the news, goes up another 50 points in the pre-market, the remainder of the pre-market session. It's actually a bit more, actually. That's why I was just pausing there. It's about 75 points, and then we're off, and the market goes up another 100 points thereafter, way above the 20 bar moving average there, and then eventually runs out of steam and trades sideways for the rest of the session. A rig gain, as I've said before. The market gapping up on the open on Sunday night, trading lower, but now sideways to higher and still above the most important indicators here on the chart, the DP level and the 200 MA at the moment, and the market moving to the upside there. As I've said, the moon is the goal. Keep this market moving higher. We marked up 76% retracement. The market traded to it. Doesn't matter about the volume anymore. And I'll show you why in just a second. It's about marking prices up and keeping them moving to the upside. And now what we need to do is to mark up the all-time high, which is 28,199. Keep this in mind as the market moves back to the upside there. Of course, you're going to get down days, but on the whole, you're going to see the market continue to move to the upside. And this is precisely what we saw on Friday as prices just continued to move to the upside with the odd pullback. Huge move, 300 points for this on this news. So let's have a look at this week's news. Just forward here, see what we've got to spice the market. So, well, there's nothing today. The market's got no news at all for today. But the most important one this week is going to be Wednesday. We've got the press conference. Doesn't look like they're forecasting any cut in interest rates. Powell said last month that he wouldn't, or September when he had the last press conference, that he wouldn't be cutting rates again in 2019. Let's wait and see. Also, on Thursday, we've got European rates as well, and their forecast, no cuts in rates. I mean, they're already at zero. They will go negative going forward. Mark my words on that one. We've got retail sales from the European Union as well. That's why, again, I paused. I thought it's a bit odd, forecasting an increase in interest rates, but it's not. This is the rates for this week. And then Criminal Lagarde will be speaking. You couldn't make this stuff up, could you? It never ceases to amaze me. And then that's it for the week. So 2 central bankers out this week, Wednesday and Thursday. We'll see what they have to say. But just going back to the correlation between printing money, this is well worth a read. There's a couple of good articles on Zero Hedge that are worth reading. I'm not saying that the crash is coming or it's just around the corner. What's fascinating about this article is the change in the Fed's balance sheet and the stock market moving higher. So here you can see that QE1, QE2, QE3, and now because of the repo market, you can see how the Fed now are doing their damnedest to keep the stock market and the economy, of course, but the byproduct is the money finds its way into the stock market, which we've seen ever since they started QE. And you only have to have a look at this chart. Let's just get past all of this stuff. You only have to see this. This is the weekly change in the S&P E-mini, and then you see the change in the balance sheet, and the correlation is nothing short of convincing and breathtaking at the same time. That the money is finding its way into the stock market, and that's why I keep saying they won't let the market fall, because they know that they can pump the money into the market. Also, speaking of interest rates, again, have a look at this chart, and you will see that the more money they are printing, the lower they want interest rates globally as well. So it is going to end in disaster eventually. It has to. But at the moment, it's not a problem. They'll just keep reducing rates. They try to increase rates through 15, 16, well, all the way through. You can see there. They tried from December 16, actually, 17, and then it failed miserably. And we're back to where, well, we're going to be back to where we started with all of this. So, yeah, there you go. There's the proof of why the money is finding its way into the stock market. The overvaluation of the stock market is going to continue, and that's why I keep speaking around 30,000 for the Dow. It's staggering, I know, but it's the way it is. Manipulation is breathtaking. Which sees the implied volatility drop on Friday from 13.19 to 11.94. There's an article on Zero Hedge talking about the lowest volatility since records began as well now as well. So no surprise, is there really? And we've gone now back to green in the implied for the moment. I mean, we're going to get corrections, there's no doubts about that, but you can see even just by looking at this chart that the corrections where they're fairly steep are getting less as well. So again, when you start looking at these things in a bit more detail, it all makes perfect sense what's going on. The 10-year is also moving higher, up to 0.31 on Friday, and then longer term, of course, we can see the inversion with the recession following, and unless they do something to really manipulate and buy every single asset next year, June of next year, we should start to see some sort of major economic slowdown, which we've already started to see in the European Union. I think it was in this article actually. Let's just have a look. Yeah, let's just get rid of this nonsense here. So yeah, here we go. This is about the European Union. No, it's not about the bit that I was after. This is about how much money they're actually printing. As we've seen 400 billion injected in liquidity into the markets since last Christmas. ECB and now Fed will add a further 107 billion in liquidity on Friday alone. The ECB and now Fed, which added 107 billion on Friday in liquidity alone. That was just to boost the balance sheets. And another 600 billion in 2020. This is serious stuff. But there you go. Wow. Right. Let's conclude with Bitcoin. Not a lot to report. The market very, very sideways. So I'm not going to go into much detail here. The main focus at the moment is the Dow, because that's where, on any stock market or indices that you wish to trade, because that's where the moves are at the moment. It's not in Bitcoin. But it's worth a quick look just to see what's going on, and getting up to speed there, you can see fairly quiet. Okay, that will do it for this one. If there is anything else to report later or whatever, then I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.